you're also in an environment where the investment or holding an investment property in Melbourne or in Victoria, owners of those properties need to have an increased standard across the board.
Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics like wealth creation strategies, investment principles, creating passive income, paying off your debt faster, and much, much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host,
Andrew. Bills, here we are back again in the new year and on the 360 Money Matters podcast.
Andrew, favourite time of the week, bringing heaps of value to everybody about everything related to money. And today is no exception. I think this one's going to work really, really well, just because we've all got a fascination with property.
Absolutely.
It's our national sport. Andrew, what are we talking to everybody about today?
Yeah, so look, today we're talking all about market expectations and where we could see or specifically the Melbourne property market over the course of 2025 and how that could ultimately all play out.
Yeah, and the interesting thing, I mean, we're obviously based in Melbourne, so we've got a particular eye on the Melbourne market. But in particular, Melbourne seems to be a bit of a different story in comparison to what's happening around the nation, which I think is probably good to highlight, just to call it out to people so they're aware of what's going on. And then also we'll talk about some of the opportunities that we see because of it and where we're actually going. So Andrew, maybe let's run through some numbers and some stats. What are we seeing in Melbourne? What's been going on?
Yeah, I mean, look, if we sort of look back to 2024, interestingly, I mean, you saw basically every capital city increasing pretty substantially. I mean, we even saw double-digit growth in some states around property prices. However, we saw the Melbourne property market really act completely differently to the rest of the country. And Melbourne property prices went down by, about 1.6% in 2024. So there's a very stark contrast to the rest of the country.
When you look at, and this is going to blow people away if they don't know this, but if you look at the median home values of Brisbane and Adelaide, they've actually surpassed Melbourne. And Perth is not too far behind as well too, if the current trajectory continues of Perth experiencing the type of growth that it has been and Melbourne experiencing the type of slump that it has been as well too. So it's interesting because if you kind of look back, I guess, traditionally in terms of where things were around Australia, Sydney always led the charge. I mean, that's understandable. Melbourne was always second, and then it was followed by Brisbane. The Melbourne market is completely underperforming and, kind of the property market is leaving Melbourne in its dust, essentially.
Yeah, which is, I mean, it's a pretty interesting thing to consider that the median home value of both Adelaide and Brisbane both surpassed Melbourne in 2024. And the fact that it's, it continues on its current trajectory, we could see Perth by as early as May increasing above and beyond Melbourne in terms of median property price. So that's phenomenal. Yeah, that's a really big story. And I think the really interesting point in it is a lot of the people talk, or, a lot of people consider, it makes sense. Property prices are declining. We've had interest rates at such a high rate. And so clearly you'd see property prices decline as a result of that. But the rest of the country has had the same interest rates. I mean, it's not like interest rate is done at the state level, it's done at the federal level. And so, what is it? I mean, what's driving property prices in Melbourne really to, be performing at such a low level in comparison to the rest of the country?
Yes, look, I'm just pausing because I'm trying to build this up, Andrew, because this is really going to give us the opportunity to beat up the state government. Because I think, when we start to unpack this, well and truly, we can point the finger here in terms of what this has caused. Going back, if you're thinking about property and what does that mean from a housing perspective, and you think about supply and demand of people needing to live somewhere, in terms of the population growth that the rest of the country is experiencing, that's no different to what we're experiencing here in Melbourne as well too. So you can't even put your finger on that and saying that for whatever reason,
A lot of immigration is coming to Melbourne.
for whatever reason, people don't want to come to Melbourne. So we'll take that one off the table. But the state government is well and truly to blame here. So we'll go through a little bit of a history lesson here. I'll backtrack and talk about how I think this has come about. But essentially, if you think back to COVID, in terms of how the Victorian state government behaved and the measures that they went to lock down, support their population, lockdowns, what did that look like? The impact on the economy, obviously there were handouts left, right and centre, but we were locked down a lot more aggressively and for a lot longer than any other state and territory in Australia, actually any other city in the world.
Yeah. I was going to say, I think it's number one city in the entire world.
You have to pay a price for that.
Yeah.
Right? You have to pay a price for that because it does do economic damage. So what does the state government do? Because they're looking at their books and going, geez, we're in a bit of a pickle here. And I use that term lightly or nicely just because I don't want to use any profanities on the podcast. But what do? We're in a really big financial hole. Oh, geez, how about we start to tax the property market? Because property is such a large part of the economy. We'll go through some of the things that they've introduced that I think has caused this, because I think once we spell this out, it'll be pretty obvious. But Andrew, what are some of those things that they're looking at doing to try and support the budget, and how's that having an impact?
Yeah, exactly right. And look, one of the big things which I really think is just the straw that's broken the camel's back is land tax. I mean, you say property prices really take a nosedive as soon as the land tax reforms were to come in. And so land tax has always been around for investment properties, but there's been an increase in land tax, which apparently is for a 10-year period. I'd be very surprised if we ever saw land tax or the increased land tax come back after the 10 years. So come back at me if in 10 years' time we're still on the podcast.
It's not going to happen.
That has come off, but there's 0% chance that that's going to be the case. You also have a state whereby and this isn't a new reform, but the stamp duty in Victoria is higher than any other rate in the rest of the country. And then you have some other really interesting things which doesn't seem to marry up to the whole we need to pay back the state debt. But you're also in an environment where the investment or holding an investment property in Melbourne or in Victoria, owners of those properties need to have an increased standard across the board. I mean, you're talking about needing to do gas and electricity checks every single year. You're talking about the regulations around windows, regulations around curtains. So the no-fault evictions, so the banning of no-fault evictions. So holding an investment property in Melbourne has become more difficult and more expensive. And as a result, you're seeing a lot of investors not necessarily selling. You are seeing some investors sell, but there's a reduced pool of investors that are wanting to enter the Victorian property market, and they're looking to other states. They're looking to other states to invest. So I think you can really pretty squarely point the finger at state government failings.
Yeah. And look, for dramatic effect, we might just pause there, hold a minute of snow. I'm just kidding. But look, if you think about property and what drives prices, it's consumer confidence, first and foremost, and then affordability and so on and so forth. But if you start to stack those things, it's kind of like death by a thousand cuts. You mentioned it. It's a straw that broke the camel's back. It's not necessarily one big thing that we can point our finger to. It's a whole culmination of a few different things. And I think what it comes down to is that just the investor confidence is just not there.
Yep.
And we're seeing that being reflected in the property prices. It's going to be interesting to talk about the scenario moving forward and what we see is going to happen in that instance. But if you don't have confidence in the market, then obviously the dollars are going to follow, and then the property prices are going to go as well too. And from an investor perspective, because we're seeing affordability decrease and the cost of owning and holding an investment property decrease, they're selling. Sorry, the cost of property increasing, they're selling their properties, And potentially, I think what's happening is diverting that capital into markets in other cities, which is why we're starting to see Brisbane and Adelaide in particular, because traditionally you could get into those markets a lot cheaper. So investors are taking that money from here and moving it to different places. So yeah, state government have got a lot to answer for. Unfortunately, the political leader who was in place at that particular point in time decided to pack his bags, take his bat and ball and go home.
Did you say unfortunately?
I was being facetious, Andrew, but anyway, enough of that. What do we think is going to happen going forward? Because we're in an interesting time at the time of recording. So this is just before the US change of power. So Donald Trump's going to come into power very, very soon. We've also got increased discussions amongst the economists in Australia about the changing interest rate environment. And we're starting to have or hear more and more about people talking about an interest rate cut in February. So Andrew, what do we see sort of moving forward, and what does this look like for Melbourne and Victoria?
Yeah, obviously there's the case and there's the scenario where things continue on the same trajectory. Investors continue to say, look, Victoria is too difficult to invest in. The burden of owning a property or an investment property in Victoria is too high. And so as a result, you could continue and see a world where it's the same trajectory. I think that that's a unlikely scenario in the long term. In the short term, it's certainly a possibility.
Mm-hmm.
But what you now start to see and what we're already starting to experience is that investors are now starting to look at the Melbourne market as a value play, because you're now at a point where median prices are cheaper in Melbourne than what they are in Brisbane and Adelaide. And so there's the potential of investors starting to look at it and say, okay, yes, the holding cost may be higher, but the purchase cost is lower. And so we could see investors really start to move back into the Victorian and the Melbourne property market.
Yep. I actually think that's the case. I mean, one of the things that I was talking about before, from an affordability perspective, I mean, yeah, we're talking about the investment opportunity here, but if we talk about the affordability of a property, and because we've seen going through an interesting time in terms of the interest rate cycle, where we've seen the Reserve Bank increase interest rates as aggressively as we've ever seen in history, coming off the back of that, what I'm expecting is once we start to see the interest rate lever get dialed down, that confidence will come back in. And then once people start to see that, and especially if we get a couple of interest rate decreases, I think that's going to be enough to create the consumer confidence, the investor confidence, to kind of be able to get that activity going again. And then from an investment perspective, if you go, okay, the landscape is turning in our favor, it makes sense to buy an investment property or to get back in. And then you start looking across the country and go, oh, geez, Adelaide's run, Brisbane's run, Perth is a completely different story. In terms of getting into those capital cities, it's expensive. Sydney, forget about it because it's always too expensive. Oh, geez, look at Melbourne. This is really attractive. So I'm expecting that once we start to see those interest rates decrease, I think it's going to be a complete game changer, in particular for the Melbourne market.
Yeah, absolutely. And I think that the Melbourne market really is waiting for that catalyst and that spark to really kick things on. And, at the moment, and this is at the time of recording, I mean, we're at the 17th of January. So at this point in time, the market's pricing in a 73% likelihood of an interest rate decline in February. Now, I don't think it's quite as likely. If I'm talking personally, I think that the RBA is going to be a little bit more cautious around declining interest rates. Yes, the Australian dollar has dropped significantly, and in order to combat that and reduce the impact to inflation off the back of that, there's a very good likelihood that the RBA may be reducing rates, but I think they are going to be a lot more cautious. I think that the US story of the Fed cutting rates and the fact that might have happened a little bit too early.
Yep.
And so now they're putting a pause on things may act as a cautionary tale for the RBA. But nonetheless, just the talk of interest rate reductions and the fact that, as far as everyone's concerned, it's almost certain that interest rates are not going to be increasing. So at least there's a stability platform. We could see that really drive growth in Melbourne property prices, particularly at a time where vacancy rates of rental properties are already at extreme lows. I mean, we're already talking about housing supply shortages. So you then throw into the mix, investors coming into the market, you could see things move pretty quickly.
Yeah, Andrew, I tend to agree with your sentiments around the timing and stuff. I mean, look, it's interesting. The Reserve Bank are independent, but obviously we're in an election year, so there's pressure from the government to be able to say, look at all the work that we've been doing on cost of living pressure. We've created an environment where the Reserve Bank can decrease interest rates. I think from the Reserve Bank's perspective, just thinking about Philip Lowe and, the stuff that happened about him saying that interest rates weren't going to move till 2024, they're going to want a lot of certainty before they pull the trigger on this. And I can assure you that if the case is not there 100%, they're going to use it as an opportunity just to kick the can down the road a little bit more because they're so sensitive to getting it wrong. When you think back about the interest rate decreasing, if you consider, and I don't have any numbers in front of me here, but if you can consider how much a 25 basis point interest rate deduction will be for people's budgets, it's not material.
Yeah.
So the actual monetary value associated with it, I don't think is the catalyst here. It's the confidence that people have in their mind about what that then looks like moving forward.
Yeah, which then becomes a self-fulfilling prophecy. 100%. You start, fear of missing out. And as soon as property prices start moving, people have experienced this in the very near term. I mean, they've had it, 3-4 years ago when property prices were moving week on week. And so because that's so close in your mind, you then start to see people bidding more and bidding more and bidding more in order to be able to secure that property. You start to get that really big upward momentum. You throw this into the mix with, yes, there's immigration that's coming into Australia and coming into Victoria. Now that probably won't impact property prices per se in the short term, because most people, as they're coming into a country, either don't have the means or don't have the visa to be able to purchase a property. Yep. But what that will do is impact rentals. Higher rental yields means people demand more for the value of their property and can pay more for their property because that's going to help support investors in terms of income coming in. You also throw into the mix that the Victorian government promised to, I think it was 500,000 houses that they were looking to build over a period of 5 years. The growth rate on that was pretty much at halfway, 50% of what they were expected to do in 2024.
Fail.
Which, supply and demand, you've got an undersupply of houses. It really only points to one direction, and there is some ambiguity and potentially some discussion around when it happens. But it looks at the moment like it's a fairly clear picture in terms of the direction that things are going to head at.
Yeah, I mean, look, I still think, maybe we're biased because we live in Melbourne as well too, but if you think about the what Melbourne has to offer, I still think that we're a very attractive option. Above and beyond that, if you just think about it from a mathematical perspective and think about reversion to the mean, over time, when this starts to work itself out, do we see Melbourne going back and taking its rightful place, essentially being the second largest?
Yeah. Well, it's the second largest economy, so you'd expect that, it'd be, in terms of median property prices, the second largest in terms of property price.
So that's where I'm going. So if that's the case, and we look at where we're currently sitting now versus what the number would look like for us to be back in second place, that's a pretty significant increase in terms of where we're at now. So from my perspective, yeah, look, I'm pretty optimistic about what Melbourne looks like, and I think there's great opportunity here for people looking at investing.
Yeah, exactly right. So particularly, and look, this is the caveat that I will always throw on it is, yes, Melbourne does look like it's a potentially good value in the medium to long term from an investment standpoint.
Mm-hmm.
So, market circumstance might make sense, but you need to make sure that your own personal circumstance, you need to make sure that your own cash flow, all of that stacks up to be able to do it. So you don't want to overextend yourself and find yourself in a position where you have to sell. And we all know that, purchasing, cost of stamp duty, cost of selling, cost of all of that stuff can mean that if you don't hold the property for long enough, you don't make a profit even in an increasing environment. So make sure that your circumstances allow for it and make sure that you're not overextending yourself. But from a market side of things, it could really represent a good buying opportunity for investors.
Yeah, I think so. Andrew, I reckon we might have done that one a bit of justice. Hopefully, we've built the case for what's happened in Melbourne, why it's happened, and what the outlook looks like for our viewers and our listeners.
Bills, thanks again for another awesome podcast. I always like talking about property because it's always such an interesting area that we're all fascinated in, and hopefully our listeners hopefully our listeners and our viewers got some value out of that episode. If you did, like, subscribe, and we look forward to catching you on the next podcast. Thanks, Siki.
Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
Just a reminder to our listeners that the information contained in this podcast is general in nature and it is not intended as personal recommendations for the audience. Please consider whether the information suits your circumstances before acting on it. This information is provided by Billy Amaritis and Andrew Nicolaou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of AMP Financial Planning.